Hello, champions. How are you all? Am I audible, visible? Please just message me once in the live chat whether I am audible and visible. Let me check. And just please message on the live chat whether I am audible and visible to you. At my end, is everything is fine. Yes. So, are you guys ready to start with the basic concept revision for the May 26 onward attempt? Okay, as per the ICA study material, whether it is a question answers and whether it is a concepts. Okay, in these revision lectures we are going to complete the concepts plus the question and answers completely. Okay, we are not going to skip anything. We are going to cover each and everything, manner but in a manner which is, just a second, is there any issues or lags? Ah, just a second. Hello, hello, hello. Am I audible, visible, and the lag is there or not? Just let me know. The lag is clear or still there? I think now everything is correct. Fine. Yes, everything is now fine. So let's start. Okay, these are the revision lectures in which we are going to complete the concepts plus the question and answers. Each and everything we are going to cover, not skipping anything as per the strictly as per the ICE study material. Okay, so let's start with the revision. Okay, first we are going to complete all the concepts of the basic concept, and then we are going ahead with the question and answers. Okay, from our book, which is already available on our Telegram channel for free to download and print. The concept notes as well as the question bank both is already free on our YouTube channel. You can go and sorry, on our Telegram channel you can go and download it. They are completely free to download and print. Okay, so the Telegram channel link is given under the description box. You can go and join from there. Now we shall be moving ahead with the concepts. Okay, now what we are going to discuss, see, there are some constitutional rights which are given. See, under article 265 of the constitution, which says that no tax shall be levied except by the authority of law. That means only the authority of law can levy the taxes. And what are the authority of laws that are given under section in article 246 of the 7th schedule? Okay, the 7th schedule to the article 246 gives three lists. Okay, in the first list, that is given by the that gives the right to the union government that you can collect the taxes on such income which is enumerated under list 1, that is a union list. In that list only there is a entry number 82 which says that the central government can take the taxes on the income other than the agriculture income. Means the agriculture income, on the agriculture income, the taxes cannot be levied by the central government. That means the income tax cannot be levied on the agriculture income. Now the state list and the concurrent list, the state list are the list in which all the matters which are enumerated, the state government can take the taxes on it. And for the concurrent list, this all the matters which is enumerated in the concurrent list means that both the government, whether the union government or the state government, both can collectively take the taxes on those income. The best example is what? The GST, that is the goods and services tax, which under the concurrent list. Now what are the components of income tax? There are income tax act, rules, finance act, that every year the Nirmala Sitharaman, the finance minister of India, came, okay, on the 1st of February at 11 a.m, okay, and she presented the budget, okay, the budget for the India for the upcoming year. So in that particular thing they also amend various kind of they also propose some amendments in the act. So this is also a part of your syllabus that you have to maintain. Okay, then part 1 talks about the finance act. Part 1 talks about the current assessment year tax rates. The part 2 talks about the tds rates. Part 3 talks about the salaries and the advanced taxes, the computation of advanced taxes. And part 4 talks about the computation of net agriculture income. All these things are talked about in all these parts. Okay, now shall we move forward? Yes. Now the part, point number 4, point number is 4 is what? Circulars and notifications. What are the circulars? See, circular in, let let us come on our notes where we have written each and everything. See, circulars are what? These are some notifications, these are some guidelines issued by the CBDT, the Central Board of Direct Taxes, to clarify some doubts and guide the officers regarding something. Okay, these are binding on the department but not binding on the assessees or the appellate tribunal. But the notifications are to give effect to act or provisos or some rules. That means, suppose in the income tax act there is written that as may be prescribed. Okay, the as may be prescribed is to be prescribed in the rules, but whether this particular rule came into effect or not, when it will come into effect, all these things will come under a notification. The CBDT will issue a notification in which it will tell this particular provision or this particular rule will come into effect from that particular date or so. Okay, each and everything will be written in there. But listen to me very carefully, the notifications are binding on the department as well as binding on the assessees and appellate tribunal as well. Everything is to be binded by the notifications. Now moving ahead with the case laws, whatever the case laws will be there, the Supreme Court judgment will be applicable to whole of India. And for the judgment of a high court, suppose the Delhi High Court has passed some judgment, so it will be applicable to that jurisdiction only. That means that judgment is only validated in the Delhi jurisdiction, not in other parts of the country. Okay, but that can be used as a reference. Okay, now then we come under the rules and aids of interpretation. What are the rules and aids of interpretation? See, if there is something written in the law, okay, now who will tell us what is the interpretation of this law? I can understand the interpretation by my method, okay, but the government is not convinced by their method, by my method. They want that I should interpret this particular law, this particular provision by their method. Okay, but I am saying that no, my method is correct, their method is wrong. So there should be someone now who will decide that this particular law should be interpreted in that particular manner. Yes, for that only the Supreme Court, high courts and other courts are there. Yes, so they are also following some rules. They are also following some rules. There are some principles, there are some doctrines or methodologies which enables them to identify the intention of the lawmaker. What is the intention of the lawmaker? If we understand the intention of the lawmaker, then it is very easy to understand what the particular law is going to say. Okay, so that is why in the rules of interpretation we have to understand what the intention of the lawmaker. The first rule is what? The literal interpretation. The first rule is what? The literal interpretation. That means whatever is written in the law, you have to understand it in that particular manner itself. That means you do not need to add something, you do not need to subtract something. Whatever is written, just read as it is, whatever it is. Okay, do not add something, do not subtract from it anything. Okay, second rule is what? Mischief rule. That means if you want to understand the amendment, that why this particular amendment came into place, so for that you have to understand what was the mischief was done by the earlier act. Okay, what was there the loophole for which the amendment came? If you understand that particular loophole, then only you can understand the amendment, the importance of amendment that came into the act. Okay, then only you will appreciate it. And to understand the interpretation of the law, to understand the intention of that particular amendment, you must find out what was the mischief that was committed by the people of India before coming to that amendment. Understood? Third point, that is the golden rule. If by reading the particular provision and interpreting it through the literal interpretation or the mischief rule, the government, suppose the court says that the meaning of the particular line or the particular provision is absurd, means the correct meaning or the correct meaning or the correct theme of the provision is somewhere missing if we are interpreting through the literal interpretation or applying the mischief rule. So in that particular case, there is a rule, that is a golden rule, which says the judges can depart from the word's original meaning. Okay, what is the meaning? Okay, you can depart from it and give the meaning which is more logical, which is related to the intention of the lawmaker. Okay, the three rules are over: the literal interpretation, the mischief rule, and the golden rule. Coming to the fourth rule, that is the harmonious construction. That means that if a particular section, suppose if a particular section have various kind of subsections, suppose 139.1, 139.2, 139.3, 139.4, 139.5. If suppose or there is a section 139 which have five subsections, suppose. So to understand the whole section number 139 na, you have to understand all those subsection and give effect to each and every line. Okay, when you understand each and every line and give meaning to each and every line, then only you are going to understand section number 139. If you are just reading section number 139.1, then it is not complete, because there could be possibility na, suppose in 139.4 there is written some exceptions to the 139.1. So to understand 139.1 in completeness, you have to read the 139.4 as well. That is why the fourth rule is there, that is a harmonious construction. That means all part of the section should be read harmoniously. That means that all part of the section should be read and give importance to all of them. Okay, now coming to the beneficial construction. Beneficial construction is what? See, suppose there could be two views possible. Okay, whatever the government is saying is also right, and whatever the taxpayer is saying is also right. Now there is a question that what is correct for the law. Okay, the court will give the ruling in whose favor, if the government is also right and if the assessee is also right. So in that particular case, there is a rule, that is a beneficial construction, which says that whatever interpretation is most beneficial to the taxpayer, that is the assessee, not to the government, whatever is most beneficial to the taxpayer is going to be interpreted. Okay, now coming to the sixth rule, that is the rule of adjustum generis, the rule of adjustum generis. Okay, and then the nociter associates. These are the two rules which you need to understand it very carefully. Okay, now what is it? The rule of adjustum generis. Okay, suppose there is a class of assets, suppose there are some class of securities. They say shares, debentures, and other securities. Suppose in a particular line this particular words are written. What are the words? They are saying shares, debentures, and other securities. Now in that particular sense, what the other securities is all about, what does the word other securities should be interpreted? It should be interpreted as a financial instrument now. It should be interpreted as a financial instrument, suppose like bonds, okay, or some other kind of the financial instrument like mutual funds, anything like that. So how do you understand the other security? How do you understand the other security word is considering about the financial instruments like bond, mutual funds, etc.? Because it take the color from these shares and debenture. These are a class of asset. Okay, the shares, debenture, other security, these are a single class of the category of assets. So whatever the other or the generic word is given at the last na, so it should take color from the category or the class of the words which are used in line with that, like the shares or debenture. That means the other security should also mean something like that only, the financial instrument or the bonds or the mutual funds or the other security is going to be interpreted in that way. Okay, this is what the rule of esdom generis is. But there is another word, that is nociter associates. For that there is an example. Suppose there is a word called plant and machinery. We do understand what the machinery is, but we do not understand what the plant is, because the plant can have two meanings. First is a tree and second is a factory. Factory is also known as what? Plant. Okay, where there is a big factories, they are commonly known as what? Plants. Okay, so trees, the plant word can be interpreted as a trees as well, the plant word is can be interpreted as a factory as well. So what should be the correct interpretation when we are going to interpret the plant and machinery as a word? So it says that whatever the word is associated with the word, Okay, if the word, if there are two words, so the first word will take the color with the corresponding of the surrounding words. Okay, so the machinery is there. If the word machinery is used, so for the plant the trees word should not be used, because the machinery is used in the factory. So the logical interpretation is that the plant is talking about the factory. So this is how you have to understand that this called what? Sonocital associates. Okay, meaning a word may be ascertained by reference to the word associated with it. Means the word derive color from the surrounding words. Understood? Very easy. Yes. Now there is a last point, that is a stare decisis. What it says, that it says that if there is something which is already settled in the eyes of the law, that means this particular word is to be interpreted in that particular manner itself. So that means yes, it to be interpreted in that manner itself. Please do not deviate from it. Please do not depart from it. It is not easy to depart from all those things. Understood? So the rules of interpretation is clear or not? Tell me that. The rules of interpretation is clear. Shall we move forward? Shall we move forward? Coming to the aids of interpretation. Now, what are the aids of interpretation? We have seen the rules of interpretation, that there are certain rules. Now, there are aids to interpretation. That means what are the documents, what are the materials that are used to interpret the law. So what are the material documents or everything that are used to interpret the law is are what? The aids of interpretation. Okay, so the first aid of interpretation is what? The first aid of interpretation is the internal aids. Internal aids are those aids which are available, in the act itself. So what are the aids, what are the material, what are the resources which is already available in our act itself? These are known as what? Internal aid. These are known as what? Internal aids. But what are the aids, what are the documents, material we need to understand the particular law, but these are not available in the act. These are not available in the act. We have to go outside the act to understand all those things. These are known as what? External aid. These are known as what? External aid. So there are two kinds of aid. First is the internal aid and second one is what? External aid. So see, the first point is what? Explanations. The first point is what? Explanation. Explanation is what? There is, if there is a law, there is a provision written, and after the provision the word explanation is written, and there is something. That means the word explanation is either clarifying the meaning of certain words or explaining the particular provision in a simpler manner, so that anyone should understand it and identify what the intention of the particular provision is. Okay, these are the explanations which are available below the provision itself. Then there is a second thing, that is the provisos. The provisos usually start with provided that, provided further that, okay, then provided also that. That means they are giving some exceptions. These are started with the provided that, provided further that, and provided also that. They are providing some exceptions to the law. Okay, if there is some exception to the law that the lawmakers want to incorporate, they incorporate through the provisos. They incorporate it through the provisos. Okay, which is also available in the act itself. Then there is a point called point number C, which is a non-obstante clause. That means it start with the word notwithstanding. That means we are not standing with anything contained in the law. Whatever written in the law, we are not concerned with. Whatever we are saying is going to be the final thing. We are not saying anything to the other section. Whatever they are saying, we are just ignoring them. So if you want to take our benefit, if you want to take the benefit of this particular provision, please follow us only. Whatever other section is saying, just ignore that. This is what the non-obstante clause is. Now coming to the marginal notes and heading. See, there is a bill. Okay, whenever you read the act, na, there is a act, and after below that, na, there is a act, and below that there is a heading written in the margin, and there is also a brief explanation of that particular heading. So this particular heading is known as what? Marginal heading, and the note which is given as a marginal note. For understanding of this thing, it also enable the user, or it also enables the code to understand what the provision actually is. So in the marginal notes of the act itself, there are certain headings and explanation given for that particular provision. This is also received by the, this is also we can find in the act itself, that is these are the internal aids. Now coming to the definition clause and the undefined words. So usually there is a definition clause. Section number 2 contains all the definition, but there could be some situations where in section number 2 all the definitions are covered as well, but for certain purpose. Okay, suppose for certain purpose, suppose 48 2, okay, the we have to give the meaning of relatives, but the relatives is already defined in the section number 2, but we have to say that for the purpose of 48 2 na, we are going to give you the different definition of relative. So they explain in the 48 2 itself, that is only and only relevant for 48 2 section, not for other sections. For other section, the definition clause section, that is section number 2, is going to be only applicable. Understood? Now coming to the external aids, what they are saying, that there could be a legislative history. You can see the historical facts, you can see the various other case laws in which how the court interpreted this particular issue. If there is a legislative history, understand from that. Okay, now there could be a circulars, we have already seen. Okay, there could be a budget speech. Okay, on the 1st of February, as I said, there is a budget speech. Okay, so in the budget speech itself na, the finance minister can say that to lease something, to lease the sorry, to give benefit to the assessees, or to reduce the burden of the assessments. So we are doing these kind of changes, we are doing these kind of amendments. So by that particular speech itself, you understand na, you understand why this particular changes is coming, because the government want to ease the particular process of assessment, government want to give the benefit to the assessees. So if we already understand why this particular provision is coming, so by speech, by reading the government or the finance ministry speech, the finance minister speech, can the lawmaker or the judges or the court can understand the particular intention behind the particular law or the provision. If they understand the intention of the law, then they can give a best interpretation to it or not. Yes, that is why the budget speech is also important. Then there is a concept called explanatory memorandum. There is a concept called what? Explanatory memorandum. What does it actually mean? Listen to me very carefully. Whatever the amendments that the government is coming with, they give a explanatory memorandum to the finance bill as a document where every amendment is explained, why this particular amendment is coming. Okay, why we are coming up with this particular amendment, what was the mischief, and how we are resolving that mischief in this particular amendment. So this is already explained by the government of India in the explanatory memorandum. You can download it, it is freely available. So after downloading it, you can read it. So you, after reading the explanatory memorandum, you can understand it, why this particular amendment came into picture. If you understand that thing, why the government is coming up with this kind of amendments, then you can understand it very careful, very easily, what should be the intention of the lawmaker. If the intention is clear, so you can give the good interpretation. Correct or not? And finally, what is what? The dictionary meaning. The dictionary meaning. Finally, if you do not know, if any word is not defined under the Income Tax Act or in the any section, but there is a word, so you can take the help of a dictionary meaning. Okay, so that the court can understand what this particular word can mean. Okay, it could be a technical dictionary, it could be a general dictionary. Any kind of a dictionaries can be used by the court to understand the intention or to understand the word which is used by the lawmakers to give the real effect of the provision, to give the intention of the lawmakers. Understood? So these are the aids of interpretation. I hope these aids of interpretation are also very much clear to you. Understood? Please keep writing on the chat. It is very much easy to know whether you understood or not. If I have to emphasize on some other points, please you can write up. Okay, now coming to the important definitions. There could be a definition of assessees, means any person who is liable to pay the taxes under the Income Tax Act is known as what? Assessee. Okay, whether he could be a assessee in default, deemed assessee in default, or any assessee on whose name the proceeding is initiated. Everyone is known as assessee. Now, person, who is a person? Person is what? Individual, HUF, firm, LLP, company, whether Indian company, foreign company, AOP, BOI, AJP, and local authority. All these known as what? Persons. Now, coming to the assessment year. Assessment year is a year, that is a financial year, start a period of 12 months starting from the 1st of April of any year and ending on the 31st of March. It is the year in which the person, in which the assessee or the person give taxes on the income earned in the previous year. Whatever the income that the assessee is earning in the previous year, the tax on that income is going to be give on the assessment year. Understood? Now coming to the previous year. What does the meaning previous year is? In the year, this is the year in which the income is earned. Okay, so it is also a period of 12 months starting from the 1st of April of any year, but the previous year can be less than of 12 months as well. Suppose my business is my suppose let me give you an example. Yes. Suppose my business is started from the 30th of July 2025. So my business is running for only 8 months. So my previous year can only be of 8 months. It does not mean that every time the previous year should be of 12 months. No. But assessment year shall always and always be of 12 months. But the previous year can be less than 12 months as well. Can assessment year be of less than 12 months? No. Definitely not. Okay, because it is the year in which you have to pay the taxes, but the year in which you are earning the money, it could be less than a 12 months. I hope the definitions is also clear. Now, what are the general rules? General rule of the income taxes says that whatever the income you are earning in the previous year is going to be taxable in the assessment year, but there are certain exceptions to it. If you are a shipping business, if you are running a shipping business of NR, person living in India, AOP, BY, AGP, that are formed for particular event or the purpose, okay, person likely to transfer property to avoid the taxes and discontinued operation. We have already discussed all these things in very detail in the exam oriented batch or the exemption batch. Okay, so you can, we are just revising all these things, so I am not going to the details, which is not as much important for your exams. Okay, so I am just giving you a brief idea what are all those things. Just to memorize these things, you can read it. Okay, now the most crucial part: diversion or application of income. What is the diversion of income and what is the application of income? Now understand it very carefully. What does it say? If this is a diversion of income, that means there should be an agreement. If there is an agreement, then we can say yes, there is a diversion of income. Okay, and if it is a diversion of income, so whoever is receiving that particular income is going to be taxed in their hand only. Means suppose there is a director who is employed with the Weber Private Limited, and there is a agreement which says that till the job the director is going to receive the salary, but after the retirement half of the salary to be credited to their wife account. Okay, this is written in the agreement, so the company is obliged to follow this. So the company is obliged to follow this. So during the tenure of the business, during the tenure when he is giving the services, the director is giving the services to the company, so whatever the salary is credited to the director account is going to be taxed in the director's hands. Correct. Now, after the retirement, suppose 50% of the salary is going in the hands of a director account, so it is going to be taxed under the director's hand. But suppose 50% is going to the wife's account. Okay, 50% is going to the wife account. That means this is going to be taxed in the hands of a wife. Now this is going to be taxed in the wife now, because there is a agreement. If there is a agreement and any income which is diverted to some other person, then there is a case of a diversion of income, and to whom this particular amount is diverted, he or she is going to liable to pay the taxes. This is what the diversion of income is. But just contrary to it, in the application of income there is no agreement. In the application of income there is no agreement to it. Suppose there is a Weber Private Limited, the director, we offer a good salary and we offer a good, suppose the working environment, the work environment is very good, so the director does not want to go home. Now he is residing in the company itself For because of that, the director's wife is very angry on him. Okay, now she want a divorce. In divorce, she want the alimony of 50,000 per month, and suppose the court approved it. Okay, so the director said to the HR of Weber Private Limited that, see, my salary is 10 lakh rupees now. So do one thing, only 9 lakh 50,000 credit to my account, but the balance 50,000 rupees now I have to give the alimony to my ex-wife now. So in that particular case, transfer the 50,000 rupees to her account directly. Okay, but this particular provision, this particular diversion which is going on, whether it is as per agreement, no. Whether it was an obligation, definitely not. If nothing is there, no agreement, no obligation, then this is what a application of income. So whatever you are transferring to your wife account as well, it is going to be taxable in the director hand only, not in the wife account. It is also going to be taxable in the director hands only. I hope it is understood. I hope it is very much clear to you. Tell me, is this point clear? Shall I move forward? Yes, move forward. So these are the examples that are written here as well, and everything I have discussed with you with the help of the examples. Now, charge of income tax. It says that income tax is going to be charged on the total income of every person at a rate specified. We have seen the person is, we have what the definite, what is the total income? Total income is what, if you club all the five heads of income, then you will come across with the gross total income. After reducing the deduction from chapter 6a, you will get what total income is. So this particular total income is going to be taxed at the rate specified. Correct, at the rate specified. And in the finance, rate is specified in the two things, either in the finance act or in the income tax. In the finance act, the general rates are defined, but in the income tax, the special rates are defined. Okay, so first we are going to understand what are the general rates, that are section number 115 BAC, that is the default tax regime. Okay, or you can say that, sorry, or if you are opting out of the default tax regime, means it is a old regime, that means it is a old regime, you can say. Okay, now for that, if you are a resident or non-resident, we do not care, everyone can cover here, but your age should be less than 60. Your age should be less than 60. You must be individual, HUF, AOP, BY, AJP. Okay, whether resident, non-resident, we do not care. Now, up to 250, your tax is going to be nil. For next 2 lakh 50,000, 5%. Next 5 lakh, 20%, and greater than 10 lakh, 30% is going to be a tax rate. But if you are a individual whose age is 60 or more, but up to 80, okay, then in that particular case, for individuals, but who is what, resident, not the non-resident. For non-resident, whether he is of age 100, we do not care, please follow this particular rate. But for an individual who is a resident of above 60 years but below 80 years, then the threshold is going to be 3 lakh rupees. Up to 3 lakh rupees, no tax is to be deducted. 3 to 5, 5%. 5 to 10, 20%, and above 10 lakh it is going to be 30%, and above 10 lakh it is going to be 30%. Okay, now for the individuals who is a resident, who is of age 80 years or more, who is the age of 80 years or more, in that particular case, up to 5 lakh rupees it is going to be nil. 5 to 10 lakh it is 20%, and greater than 10 lakh it is going to be 30%. It is going to be what, 30%. Now understand the circular by the CBDT which says that if your birthday is on 1st of April 2026, but you have to attain the age of 60 or 80 by the previous year, that means by the 31st of March 2026, but your birthday coming on 1st of April 2026, so we will assume that you are complete, your birthday was on 31st of March 2026, and you have completed the age of 60 or 80 by that date, so you can take the higher deductions, you can take the higher basic exemption limit. This is what the note is saying. Now coming to the default tax regime, which says that you are a resident, you are a non-resident, does not matter, whatever the age, we do not care. These two things are not taken care of in this particular regime. So whatever, whether you are a resident, non-resident, whether you are of age 60, 80, 20, we do not care. This is the only slab you have to follow. So they're saying up to 4 lakh rupees, no tax. For then increase the slab by 4 lakh rupees and increase the rate by 5%. So 4 to 8 lakh, 8 to 12 lakh, 12 to 16, 16 to 20, 20 to 24, and greater than 24, and it is going to be 5, 10 to 15, 20, 25, 30. So increase the slab by 4 lakh and increase the percentage by 5 percentage. Okay, this is going to be it. Now some notes. Okay, AMT is not going to be applicable in that particular case of a 115 BAC. The maximum surcharge rate is going to be 25% only. There is no surcharge of 37% in the new regime. Okay, but in the old regime there is a surcharge rate of 37% as well. And for the brought forward losses, these are also not allowed to set off whatever the previous brought forward losses. Now it is not going to be allowed as set off, but they can be added to the opening WDB of the block. They can be added to the opening WDB of the block. Understood. That for the detailed discussion of 115 BAC, you have to refer chapter number 9, which is the assessment of various entities. ICA has given the detailed explanation in the chapter number 9 only. Okay, that is why we have not covered. We are covering as per the ICA study material strictly. Now coming to the surcharge rate. What are the surcharge rates? They are saying that it is a tax on the tax computed. Whatever the tax you are computing, on that tax you have to pay over and above something. This is what the surcharge rate is. Now if you are earning up to 50 lakh rupees, and so government is not considering you a rich person. If you are not a rich person, they do not want something extra from you. But if you are a rich person, that means if you are earning for more than 50 lakh rupees in a year, and but up to 1 crore rupees, then they are charging you 10% extra. But if you are earning 1 crore rupees, if you are earning more than 1 crore rupees but up to 2 crore rupees, they are charging only 15% of the surcharge. But now from here there is a twist. If you are earning more than 2 crore rupees, if you are earning more than 2 crore rupees and your total income includes dividend and capital gains, if your total income includes dividend and capital gain, whether 111A, 112A or 112, okay, these are known as what? Special income. These are known as what? Special income. So if your income, if your total income is greater than 2 crore rupees and it includes these kind of incomes, then you have to do a bifurcation. Then you have to do a bifurcation. So whatever the special income is going to be is going to get a surcharge rate of 15% for sure. Okay, and whatever the balance income is, whatever the balance income is, you have to see if it is up to 2 crore rupees, 15%, 2 to 5 crore, 25%, in greater than 5 crore, 37% is going to be the surcharge rate. Okay, 37% is going to be the surcharge rate. Suppose if your income is 10 crore rupees, if your income is 10 crore rupees, that means it is exceeding 2 crore, and the special income has 6 crore rupees. Special income is of 6 crore rupees. Other income is 4 lakh rupees. Sorry, 4 crore rupees. So the special income, whatever the special income is, you have to maintain a surcharge rate of 15% only. But for the other incomes, the balance income, you have to say what is the slab. It is greater than 2 crore but up to 5 crore na, so it is going to be 25%. Now in the 10 crore, suppose the special income is only 1.5 crore, then also it is going to be 15% rate. But for the rest income which is greater than 5 crore, it is going to be 37% of the rate. Understood? Suppose the income is 2 crore only, so everything is going to be taxed at the rate of 15% itself, because the provision of bifurcation only applies when it is greater than 2 crore. The income is greater than 2 crore. Understood? Now suppose the income is 7 crore rupees and the special income is only 1 crore, then also it is going to be 15%, and other income is going to be based on this slab. If it is more than 5 crore rupees, then it is going to be 37%. I hope it is clear to you. I hope it is clear to you. Shall I move forward? Yes. Now, if we are going to see the tax rates for the firm, LLP and local authority, they are to be taxed at 30% plus 12% of the surcharge if their total income exceeding 1 crore rupees. Okay. Now, the cooperative society up to 10,000 rupees, they are going to tax at the rate of 10%, 10 to 20, 20%, and greater than 20, the 30% is going to be the tax rate. And the surcharge rate for the cooperative society is same as domestic companies. Okay, so we'll see in the domestic company, we'll consider the cooperative societies as well. Now in the case of a domestic company, they are saying that if your previous year 23-24 turnover is up to 400 crore na, then you have to pay the taxes at the rate of 25%, and for the other companies it is going to be 30%. Now my question comes in, where a company incorporated in the previous year 24-25, if a company is incorporated in the previous year 24-25, then tell me what is going to be the tax rate. You can say 30%? No. the 25% is going to be tax rate, because if the company is incorporated in 24-25, that means the company was not in existence in 23-24. If it is not in existence in 23-24, that means the turnover of the company in 23-24 is going to be zero, which is up to 400 crore only. So it is going to be 25% only. Understood? Now for the foreign company, remember this only the balance income. Remember this only for the foreign company, the tax rate is going to be 35%. Okay. Rest of these things will be taken care in the non-resident chapter as well. Now, coming for the surcharge rate of the company. For if we are talking about the surcharge rate of the company, so if the total income is exceeding from 1 crore but up to 10 crore, so for the domestic company or the cooperative society, the surcharge rate is what? 7%, and if the income exceeding 10 crore, 12%. If for the foreign company, if income exceeding 1 to 1 crore but up to 10 crore, 2%, and greater than 10 crore is going to be 5%. Now coming to the concept of marginal relief. If by increasing a little bit of income, your tax increases greater than your income, the increase in tax is greater than the increase in income, then the concept of marginal relief applies. So there are the four steps to solve the questions of marginal relief. So we are coming to the concept notes, and we have to see, suppose if my income is going to be 1 crore 1 lakh rupees, so as per the old regime, what is going to be the tax? We have calculated the tax, and we are saying that including the surcharge, but do not include the HEC here. Okay, including the surcharge, my tax is going to be what? 32 lakh 68,875. But if below that only, suppose if I come by 1 crore rupees only, so my surcharge rate reduced to 10%, I bet that my tax becomes what? 30 lakh 93,750. So the first step is what? You have to calculate the tax on the original income. Second step is what? You have to calculate the tax on the income which is just below the original income, okay, on which the surcharge rate is less. Okay, now you have to see what is the increase in income. From 1 crore, the increase in income is what? Only 1 lakh rupees. Okay, so increase in income is 1 lakh rupees. What is the increase in tax? From this to this, okay, the increase in tax is what? 1 lakh 75,000. So increase in income is is less than the increase in tax, means the increase in tax is greater than the increase in income. So the third step you have to do, see, this is okay for you, you were paying earlier as well, this amount is okay for you, you do not want to give this. Okay, so what the government is saying, that in the step number 2, just increase whatever the increase in your income, you have to just add it. So the step number 2 plus increase of your income comes the step number 3, means now the government is asking you this much amount only. Earlier they were asking you this much, but now they are asking you this much. So the difference between of the two is going to be your marginal relief, is going to be your what? Marginal relief. And the marginal relief is going to exactly the same, the difference between of the two is going to exactly be the same. Understood? Shall I move forward? Yes. Now this is a question note which we will solve in a particular question, which says that there is no concept of marginal relief above the income if the income is above 5 crore rupees in the new tax regime. Why? Because there is no surcharge rate greater than 25%. See, if there is a old regime, then there is a surcharge rate of 37%, but in the new regime there is a only surcharge rate of 25%. So whether your income is greater than 2 crore or 5 crore does not matter, the surcharge rate is going to be the same. So if the surcharge rate is going to be the same, then the concept of marginal relief does not also apply, because the increase in tax will not be greater than the increase of your income. That is why the concept of marginal relief does not come into play. Okay, understood? On that particular point there is a question we will see. Okay, now the concept of rebate. If your income is up to 12 lakh rupees in the new regime, then the rebate is going to be 60,000, and if you are in the old regime, then up to 5 lakh there is a rebate of 12,500. And the concept of marginal relief is also given in the new tax regime only, but not in the old tax regime. Remember this, the concept of marginal relief in the rebate is applicable only and only in the new tax regime, not in the old tax regime. Understood? Now how to calculate the marginal relief? This is the formula, we will see it. We will see in the question and answer what is the formula. The tax payable whatever the tax payable, we need to first compute on the original income. Whatever the original income is, calculate the tax payable of it, reduced by what? Reduced by the total income minus 12 lakh. Okay, this is going to be the extra income that you are earning. So the tax payable minus the extra income, you will get the relief. Okay, after that relief, you can reduce that relief from the tax that you are going to pay. You will get the final tax liability. That's it, we are going to solve the question on it. So for the HEC and the round off, so HEC is always and always be applied before calculating the final tax liability. Add 4% HEC definitely, and the total income and the tax payable, these two things only to be rounded off, not everything. Only the total income and the tax payable is going to be rounded off in the multiple of tens. Okay, if there is a figure 5 at the last of greater than 5, okay, equal or greater than 5, then it is to be rounded off in a higher side. Okay, suppose we have given an example now. Yes, if there is a 28 565, so it is to be rounded as 70 566, 70 564, then 60. Okay, if less than 5, then round it off in the lower side. Correct. Now in the slab rate, all these different slab rate we are going to study in the capital gains. Now what we are going to study in this particular section, in this particular part, is what? 115 BPE, unexplained money investment or expenditure, is going to be taxed at the rate of 60% plus a surcharge plus cess. It effectively comes around 78% of the tax. Okay, clear. So 115 BB is applicable on the unexplained money investment or expenditure, that is around 60%. That is around 60%. Now coming to a last and the most important section of your chapter number 1, that is the undisclosed sources of income. Section number 68. Section number 68 says that if there is a cash credit, means if any sum which is credited in the books of account of the assessee, but the assessee is not able to explain the source and the nature of the amount which is received in the books of account, or if he is offering the explanation, it is not satisfactory to the AO, then the AO shall increase the amount, that is the amount which is written in the books of account for which the explanation is not offered, or if offered then it is not satisfactory, then it is going to be your deemed PGBP income, and you have to pay the taxes at the rate of 60% plus surcharge plus cess. Okay, now for the unexplained loans and borrowings, see, if you have taken the loan from something, so the assessee is on the burden is on the assessee to prove that if the whatever the lender of such loan offers explanations about the nature and sources of such sum, so the lender should offer the explanation of the nature and source from where that particular amount has come to give the loan. And second, it must also be satisfactory. If it is not satisfactory, then we are going to add in the assessee's income. Okay, now moving forward to the section number 69. Each and everything is going to be the same. Every section is going to tell about the same thing. Section number 69 talks about what? Unexplained expenditure. That means you have done certain expenditure which is not recorded in the books of account, which is not recorded in the books of account. So the AO come. Now he is asking you from where this particular amount come. Okay, what is the source? You does not offer any kind of explanation, but sometimes you offer it, but the AO is not satisfied with that explanation. So in that particular case as well, it is going to be taxed as a deemed income. They will increase your income. Section number 69A, in unexplained money, means if there is any money, bullion, jewelry, other variables which are not recorded in the books of accounts, but the AO comes the AO comes and check these are available in your books, of these are available in your stock, okay, but not recorded in the books of account. So they ask you from where this particular things came, okay, but you offer no explanation or offer but unsatisfactory explanation, so they are also deemed as your income. Now ownership is important, where the possession does not affect. Okay, if you just having that, if you are having the possession of those money bullions, that does not mean that it should be added in your income. Okay, to add in your income, it should be that important. What is important? That you must also be the owner of that particular property. Okay, now the same section number 69B is also talking about the same thing, but what they are saying that if you have done the expenditure of 20 lakh rupees, but showing only 10 lakh rupees in the books of account, the balance 10 lakh is not shown. Okay, because might be that particular transaction of the balance 10 lakh rupees is from the black money. Okay, that is why you are not showing them. So for that particular purpose they are saying that whatever the amount which is the amount actually spent exceeds the amount recorded in the books of accounts, means you are recording the less amount in the books of account than the actual expenditure. In that particular case, the AO can ask you, if you offer no explanation or unexplained explanation, then it is going to be your deemed income. Understood? Now section number 69c, section number 69c talks about what? Unexplained expenditure. Suppose you have done certain expenditure but you have no explanation to it, or explanation to it but unsatisfactory to the AO. In such case as well, it is going to be your income. In that particular case, remember these are the expenditure. Please do not ask for deduction from these sections. We are not going to give you deduction of the unexplained expenditure under any head of income. We are not going to give you the deductions. Understood? Now coming to section number 69d. Coming to the section number 69d, which says that if you have taken any amount on hundi, okay, and you are paying along with the interest, the repayment also includes the interest, okay, but it is not by way of account pay check. If it is not by way of account pay check, then it is going to be added in your income. Suppose there is a point, that there is a question point I am discussing, like you have borrowed 25,000 rupees, okay, which is by the bearer check, suppose by the bearer check, and you are repaying 30,000 rupees by the account pay check. Okay, if you are repaying by account pay check, then it's okay. But if you are borrowing 25,000 rupees in the bearer check, then it is not allowed, because it is not as per the account pay check. Then this 25,000 is going to become your PGBP income. Understood? This is clear. Now miscellaneous points. Now the section, this particular chapter is going to be over. Salary head, under the new regime you are going to get 75,000 of deduction. In the old regime you are going to get only 50,000 of deduction. Now the house property deduction na, we are going to see from the chart. Okay, see, in the old regime, the self-occupied property, the interest was allowed up to 2 lakh rupees and no carry forward was there. But in the let out property, you can take as much interest it is there, you can take, there is no limit, and you can also set off the particular amount up to 2 lakh rupees. Okay, in the new regime, self-occupied property, there is no deduction on the interest on loan. You cannot take any interest on loan deduction in the new regime under the self-occupied property. But on the let-out property, the interest on loan is allowed. If the interest on loan is allowed up to no limit, you can take any kind of limit, but carry forward or set off is not allowed. Now there is also a point, that is the gross annual value minus the municipal taxes comes what? Net annual value. And the municipal taxes, whether paid in India or outside India, does not matter, everything is covered. Okay, out of this NAV you give a standard deduction of 30% from the section of 24A. Okay, it is allowed. Okay, under the new regime as well, the standard deduction is allowed. Now coming to the next concept of partial integration of tax. The next concept of partial integration of tax, which says that suppose your income includes the net agriculture income. What is the net agriculture income? Agriculture income minus the expenses. Okay, and you are also earning a other income which is greater than basic exemption limit. So if your net agriculture income is exceeding 5,000 rupees, and means that both the condition to be simultaneously followed, and the other non-agriculture income is exceeding basic exemption limit, if both the condition is fulfilled, then you have to follow the concept of partial integration, where what you have to do, first you have to calculate the taxes on the net agriculture income plus the non-agriculture income, means the total income whatever you are earning, compute the tax on it. Now, on which income the tax should not be computed? Net agriculture income. Why? Because the agriculture income is out of scope of the income tax act. So it should be eliminated, and the basic exemption limit should also be eliminated now. So calculate the tax on it. Okay. So in the first step, you have to calculate the tax on the whole income. In the second step, you have to calculate the tax on the income which is not allowed, on which the tax should not be taken. So from 1 minus 2 you will get the final tax liability. From the whole amount you have to calculate, you have to reduce the amount which is not taxable. Understood? Now coming to the case laws, only from point number 6 we have seen in the basic concept chapter. Okay, the JIT and PAL X-rays case law, which says that if there is an overriding charge on the profit, whether it is a diversion or application of income, it is a diversion of income. Okay, whether a HUF can continue with a only one male co-partner, there are other co-partners as well, but there are only one male partner. Okay, male co-partner is only one. There are other females only. So whether the HUF can only run with the one male partner, one male co-partner, yes, it is also allowed. The HUF is still in existence. Okay, now CIT versus Nariman B. Barucha and Sons, what it says that suppose there is a partnership deed, okay, and you are obliged to pay to a third party under a partnership deed, whether it is a diversion of income, definitely there is a partnership deed means an agreement and you are obligated as well, so it is a diversion of income. Now whether a legal stage, when the legal age is attained, this is already considered in the circular of the CBDT, which says that if your birthday coming on a 1st April means you have already attained the age on 31st of March. We have seen the circular. Okay. Now, can a loan be taxed as unexpended cash credit under section 68 if the creditor source is unclear? We have already seen under section number 68 on the loans on borrowing. Yes, the assessee has the burden to prove that what is the source and the nature of the amount. Okay, if it is not explained, then it is going to be added in the assessee's income. This is what it is written. By this we have completed the concept of basic concept. We have completed the whole concepts of basic concepts. I hope it is very much clear to you. Shall we move forward to the question and answers? Yes. First, coming to the ICSM illustrations. ICSM illustrations, the first question is very easy. You have to calculate the tax on 52 years age, 64 and 83 years of age. The basic question, okay, from the old tax regime. From the old tax regime. It is very much clear. We are not going to solve this particular question. Now, question number 2. See, the income is what? 51 lakh. The income is what? 51 lakh. If the income is 51 lakh rupees, you have to follow the concept of marginal relief. Our first step is what? First step was to calculate the income. Okay, or tax on the normal income. See, question number 2. On the 51 lakh rupees, you have to compute the normal tax. Okay, then on the 50 lakh, you have to compute the tax. Okay, then increase in income or increase in tax. Increase in income is 1 lakh rupees, but increase in tax is 1 lakh 64 250. In that particular case, what will happen? Step 2 plus income, increase in income. Step 2 is this, plus increase in income is going to be a final tax liability. Earlier they were asking you this, now they are asking you this much only. So the difference is going to be what? Your marginal relief. The difference is going to be what? The marginal relief. So the tax on 51 lakh rupees, the tax on 51 lakh rupees was this. Okay, out of this was the marginal relief was given, so they are charging you this only. So this much plus health and education says you have to give the final tax liability is 14 lakh 69,000 rupees. The same question, the question number 3. Okay, this is on the 1 crore 1 lakh rupees of the income that I have already given you the example. Okay, I have already given the example, correct? Now the question number 3, I think it is for the, yes, it is under the default tax regime and everything remains the same. Just under the default tax regime it is solved. Okay, every step is same, just the calculation part of the tax is changed. Okay, now moving ahead to the important question. It is on the 2 crore 1 lakh rupees, also the same question of the marginal relief. Now coming to the most important question, that is question number 5. Now see, you have to calculate the tax in the most beneficial manner. If they are asking you to calculate the tax in the most beneficial manner, that means you have to calculate as per the old regime, you have to calculate as per the default regime. Okay, and whichever is more beneficial to the assessee, you have to choose one. Okay, now your income is greater than 5 crore rupees, means 5 crore 1 lakh. If there is such a slight change of 1 lakh or 2 lakh rupees, that means the concept of marginal relief should apply. But the income is greater than 5 crore rupees, so that means in the default tax regime 115 BAC, the concept of marginal relief should not be available because the surcharge rate is maximum 25%. Only there is no 37%. So while computing the tax on the default regime, you have to compute the normal tax only. No margin relief concept should be given. But under the old regime, the concept of margin relief should come. Yes. So on the 5 crore 1 lakh rupees, you have to follow the margin relief steps. You have to follow the margin relief steps and then compute the final tax liability, as we have already seen under the two parts. Okay, so as per the old regime, this is going to be your income. As per the new regime, this is going to be your income. So what is going to, this is your tax. So what is beneficial to the assessee? I should pay as per 115 BAC because the tax liability is less. Okay, in that particular case, we will choose the default tax regime because the tax liability is less by 3 lakh 64,000 rupees. Now in question number 6 and 7, just a normal question where you have to calculate the margin relief in the case of the companies. Okay, very easy, nothing else. Okay, now the rebate, yes. Question number 9 is important, which says that you have to calculate the rebate in the case of a new tax regime. Okay, see, if my income is 12 lakh 15,000 rupees. So first step is what? Tax payable on the original income. The original income, the tax payable is what? 62,250. Okay, you have to calculate as per the default tax regime. You can calculate the income comes what? 62,250. Correct. Now my formula was tax payable, okay, that is 62,250 minus my total income, that is 12 lakh 15,000 minus 12 lakh. Just a second. Okay, so 62,250 minus 15,000, it is going to be 47,250. This is the amount of relief I am going to get. So 47,250 to be reduced. So it is, my income is going to be only 15,000 rupees plus HEC is going to be 600. Okay, so my final tax liability is going to be 15,600. My final tax liability is going to be 15,600. I hope this particular question is also very much clear to you. Now, question number 10 is not at all very important. Okay, now coming to the TY case. Only the important TY case I am going to discuss with you, not the every TY case. Okay, see, if you are paying any overriding charge, okay, as per the sale deed, okay. So if there is a sale deed, you are obligated to pay anything, whether it is a diversion of income or application of income. Definitely a diversion of income. You have already seen the overriding charge case law, correct? Now, see, suppose if there is a MKG Agency is a partnership firm in which the Mr. Mohan and their three sons is going to be the partners. Okay, the partnership deed says that after the death of Mr. Mohan, the business shall continue by the sons, but there is a condition that 20% of the profit should be credited to their mother Lakshmi account. So in that particular case, whatever the amount is credited to the Lakshmi account, whether this is a diversion of income or application of income, this is going to be diversion of income. Understood? Now, whether, see, Anand was a karta of a HUF. He died leaving the major son Prem. There is only a one son, that is a male co-partner, only one. Then see, his widow, grandmother and brother's wife, everyone is what? Female. So whether the HUF can retain the status? Yes, HUF can retain the status. We have already seen in the case law of Goli Buddhana. Okay, now this particular point, 25,000 by bearer check, 30,000 by account pay check, we have already seen by the concept of section number 69D. Okay, section number 69C is also very much easy. They are asking some unexplained expenditure which was not debited in the books of account. There was some expenditure which was done. Okay, now the assessing officer is adding that income in your books, as your PGBP income, but you are asking them, okay, these are as per my business. Okay, these are for my business, so kindly allow me the deduction of 60,000 from the PGBP income. So no deduction shall be allowed under section number 69C. This is very much clear. We have already seen that. Okay, now this is the last question, the normal question, which it was they are asking that compute the tax on 16 lakh rupees as per the default tax regime. This is what it is. Okay, this is a very easy question. You can solve it by your own. So by this we have completed the whole question and answer discussion with the concepts. Okay, I hope you have liked it. Okay, if you have any query, you can ask it. Otherwise, we are going to meet in the next revision of the PGBP in the upcoming Sunday. Upcoming Sunday, we are going to revise the PGBP. Okay, this is all for the day. We have completed the basic concept. If you have any query, you can ask us. Okay, the batches, if you want to enroll for the batches for the exemption batch, okay, that is the exam oriented batch, you can enroll it from our website. It is available, okay, from the website. if I can show you, so if I can show you, yeah, just search Weber Bansal classes or weberbansalclasses.com. You can see weberbansalclasses.com. Okay, in that particular part you can see our exam oriented batch. If you want to enroll, you can choose the recorded views or the validity according to you, and you will get the everything. Okay, weberbansalclasses.com, you can search it and you will find the classes. If you want to purchase the classes, if you want to purchase the question bank that we are using, okay, everything is available on the website. You can purchase it from there. Okay, I hope everything is done. Now we shall be meeting in the next revision lecture. Till then, take care, all the best, and keep writing, keep revising. That only makes you pass with the exemption. Take care. Bye bye.